Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin continues testing market patience around the $68,000 level, with Ethereum at roughly $1,989 and XRP hovering near $1.37. The cryptocurrency market experienced significant volatility this week as institutional flows, regulatory developments, and macroeconomic headwinds created conflicting signals. Bitcoin ETFs experienced their worst single-day outflows in 3 weeks on March 5th, shedding $228 million. However, longer-term metrics tell a more nuanced story. The 14-day Bitcoin spot ETF net flow trend has turned positive, and the 30-day position change has stabilized, indicating what Glassnode Analytics describes as easing distribution pressure and early institutional reaccumulation. Multiple analysts emphasize that single-day outflows shouldn't overshadow broader positive trends. Weekly outflow trends have slowed and potentially reversed, with mid-$60,000 levels representing reasonable accumulation entry points. However, experts caution that ETF flows alone don't reveal the full picture. On-chain activity, geopolitical hedging demand, and broader institutional positioning remain critical factors. Strike secured a BitLicense from the New York State Department of Financial Services, allowing the Bitcoin Financial Services Company to operate in one of the nation's most tightly regulated digital asset markets. The approval enables Strike to offer Bitcoin buying and selling, paycheck conversion into Bitcoin, and bill payments from Bitcoin balances to New York residents and businesses. Regulatory scrutiny on prediction markets intensified after $679 million in wagers tied to U.S.-Israel military action against Iran raised insider trading concerns. Democratic lawmakers are pursuing legislative strategies to restrict war-related prediction market contracts, with the CFTC launching new rulemaking processes. Kazakhstan's central bank announced plans to invest up to $350 million from its reserves into digital asset-related investments, including shares of high-tech companies connected to cryptocurrencies and index funds tracking crypto markets. The investments are expected between April and May. Florida's Senate unanimously passed comprehensive stablecoin regulation, potentially making Florida the first U.S. state with a full stablecoin framework. The legislation classifies stablecoins as non-securities, but requires issuers to be licensed as money services businesses with strict reserve requirements. Pakistan officially passed the Virtual Assets Act, establishing a comprehensive legal framework for its $300 billion crypto market serving 30 to 40 million users. The law creates the Pakistan Virtual Assets Regulatory Authority and includes a Sharia advisory committee. Technical indicators present mixed signals. Bitcoin formed a death cross on March 3rd when the 50-day moving average crossed below the 200-day average, historically a bearish signal. However, on-chain data shows nearly 32,000 BTC withdrawn from exchanges in a single day, suggesting investors are moving coins into long-term storage rather than preparing to sell. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.